India Sotheby's International Realty, a market leader in luxury residential sales, recently announced a growth of over 50% in gross property sales turnover in the financial year 2023 over financial year 2022. Now, the sales value of real estate transacted by India SIR in FY 2023 touched a whopping $450 million against $300 million in the previous year. Now, what's brewing in India's luxury housing market, and is the momentum likely to continue? We are joined by Amit Goyal, Managing Director, and Ashwin, Chadha, CEO of the company. Gentlemen, thank you very much for joining me. I think the first question goes to Amit. Amit, tell me, what factors have driven this 50% plus growth in sales transaction volume? It's a big number.
Sure. Thank you, Manisha. Yeah, that's a happy situation. So firstly, I wish to thank our clients and our stakeholders who posed their trust in us so we could continue to grow and keep this growth, momentum active. And the key factors, as you asked, the key factors are primarily, people wanting to upgrade their homes, the new wealth which is being created, some of our increased inventory that we have, thanks to our, past transactions in the market, that we have larger inventory. Our inventory has gone up by about 30%. Because of more penetration in newer markets, larger teams that we have, and our network, which is getting us more and more, leads and queries of buyers as well as sellers, not just within India, but also through our Sotheby's network offices outside of India.
Okay. So what I'm hearing is that A, the demand has been good, and B, your own tentacles or let's say strength has increased in the India market. All right. Ashwin, do you believe that you will be able to, as an organization, maintain this growth momentum? I mean, you are riding on an excellent stock market run, lots of unicorns selling their stake, etc. The press release that you put out said that the organization is targeting $1 billion worth of property value in sales. So that's a big number and an ambitious number.
Yes, it is an ambitious number, and we like to, take ambitious goals and achieve them. I think if you look at the macro situation in India, a lot of positives which I would like to highlight to our viewers. One being the Reserve Bank of India recently paused the interest rate hikes. Two, somewhat the inflation has been tamed. Three, if you look at our exports in our 75th year, we have managed to deliver a $750 billion of exports as a country. Four, the consumer sentiment index has been going up successively since May of 2020. So I do feel that this momentum is here to last. Yes, stock markets have given huge returns over the last 3 years, maybe not in the next couple of years, but there is one very big micro driver which we as real estate professionals see. You may be aware of the fact that the recent budget has made mutual fund returns for debt mutual funds and market-linked debentures taxable. As you would know, mutual fund industry is a 40 lakh crore industry, and over 50% of the mutual fund schemes are in debt. So that's a huge amount of money which could possibly find its way slowly and steadily in the medium to long run to real estate, and within real estate to commercial as well as residential.
So you're saying that there are investors who are now going to come into the market, or are investors already back in the market, Ashwin?
So short answer is yes, the investor is back in the market. And why we believe so is, whether we look at our numbers of going from 190 million to in FY 2021 to a 300 in FY 22 and 450, as you just alluded to, in FY 23, in terms of sales figures, I feel that there is a lot more happening. You look at the recent news by DLF, selling 1,100 units in 3 days, $1 million ticket size on an average and upwards. Clearly, the investor is back, and this news is spreading from city to city.
So let's move on now. This growth number that you've pegged at, Amit, Is it all going to come from residential sales, or are there other segments that have contributed to the numbers this year and are likely to contribute going forward? Are there new segments of business that you will add, which you're actually positive about, optimistic about?
So Manisha, our brand DNA remains luxury residential, and even this year, our almost 90% or a little over 90% revenues came from residential. But at the same time, we have, expanded some of our other verticals. We have expanded into the commercial vertical and capital markets, and also the design. So when we are selling these beautiful homes, we are also having a design team in-house, which can deliver clients, redevelopment or interiors, fit-outs, furnishing, etc. of their homes. At the same time, we've also expanded into prop tech. So we are working very actively with some tech companies. We've invested, in some companies already. And we are also exploring to get into the fractional as well as some AIF opportunities in the near future.
All right, gentlemen, thank you very much for talking with me. Well, we are wrapping on a positive note, both on the front of what the committee, which is going to meet for the first time for completion of stalled projects, will come forth with, and of course also on this bullish sentiment for upper-end luxury housing in India. That's it from us. Goodbye.